Hi, this is Zak Mir from Master Investor with a look at some bulletin board hero stocks on Monday, the 26th of January. Starting off with Union Jack Oil, where it looks as though we've got a stock in a mildly descending price channel in place on the daily chart since the summer of 2013. We had the pullback that you'd expect with the oil price since the autumn. But it does look as though the shares are, rather than being in a downtrend, are actually in a range, arguably sort of just below 0.2 pence to 0.45 pence, that sort of thing. And there are the makings of a recovery here at the moment. Higher low for January versus December. We've got this extended RSI uptrend line here as well, which has been multi-tested since November, which indicates a turn in the momentum. And really, all that one wants to see now is decent close, maybe above the 50-day moving average now at 0.2 pence to get the shares officially back within the range that we've seen over the past year or year and a half. If you're cautious on the stock, maybe still wait for 0.25 pence to break. That was the November-December resistance, but I do think that the 50-day moving average should be enough here, and basically only well back below 0.15. Obviously, the December bear trap support would be outright negative at this stage, and the shares at the initial target from here would be the 200-day moving average, obviously at 0.28 pence. But looking for Union Jack to re-establish its previous range over the near term, probably getting back to the peaks if all goes well over the next 1 to 2 months. Next up is Frontera, which is interesting in the sense that the shares have managed to basically hold flat against a sort of difficult market and have actually improved since December as well. Similar sort of bear trap configuration to that of Union Jack Oil. The current pattern here is trading either side of the 50-day moving average at 0.4 pence. That's coming in now as support as the stock is improving. And we've also got a December uptrend line in the RSI window above 50 now on that oscillator, which is positive, and it indicates gathering momentum. Best case scenario now is that we head back towards 1 pence, 1.2 pence, while there's no end of day close back below this December support line around the 0.7 pence level. Time frame on the move, maybe the next 4 to 6 weeks at the latest. If we don't get up there by then, probably one would expect or suggest that the shares are due for more consolidation of the type that we saw going into the summer. Next up and to finish is a stock which really is an attempt to get back onto the gold bandwagon. Here is Touchstone Gold, which had its initial sort of push in the autumn up to 1.4 pence, 1.5 pence at that time. Consolidation we've seen there since then, really either side of the 200-day moving average now at 0.51 pence. This looks like a sort of V-shaped bull flag, maybe not quite as exciting as it could be just yet, but a break back above, let's just say the 20-day moving average 0.74 pence should be enough to take the shares up for a retest of the best levels of last year, 1.2, 1.4 pence plus over the next month or two. And stop loss on the buy argument at the moment really back below the 50-day moving average at 0.56 pence. And that looks reasonably robust, especially given the way that to start January we had a 50-day, 200-day moving average golden cross buy signal, which obviously by definition is a constructive thing to happen. That's it from me. More updates at masterinvestor.co.uk.